how concerned are clients about these deficits and the big, beautiful bill? Like, what's the vibe out there in terms of what you're hearing?
I think investors are a bit confused because I think they went into the start of this year with the new administration and whether it was all the conversations around DOGE and cutting government spending, the secretary's comments around moving to 3% deficit to GDP ratio, and then they look at the reconciliation bill and there's a bit of how does this all line up when we have a bill that's potentially adding to deficits over the next 10 years. The one thing that I think clients and investors are still, maybe the jury's still out on, is tariff revenue. Because that could be significant, right? And you hear that often now from the White House saying like, well, CBO scores the bill one way, but they don't account for the substantial tariff revenue that's coming in. They did a separate analysis of the president's tariffs and found that could raise, I think, $2.7 trillion in revenue over 10 years. So that could be a big offset to the one big beautiful bill. And I think clients are just uncertain about, as we all are, how long those tariffs are going to be in effect for, what form they're ultimately going to settle on. And that all will be important to understanding how much revenue they can generate.
Investors always say that they're worried about deficits, but that's not reflected in the market. Why is that?
I'm always shocked, and maybe I shouldn't be at this point, but investors are so forward-thinking that much of this bill was priced into asset prices going back to President Trump's election in November. There was an expectation that we were going to get a reconciliation bill. We were going to get an extension of the tax cuts. And so in some ways, the market story for this bill is already behind us.
But people have been worried about deficits for years, if not decades. Like, when does this actually start to become a concern, if it does?
One date on the calendar to look at, and it's still 8 or so years away, is we just got recent updates from the trustees for the entitlement program saying that Social Security Trust Fund is going to go insolvent in the early 2030s. That will leave Congress with a decision it has to make, right? Either current retirees' benefits will be cut by approximately a quarter, or Congress needs to figure out some way to make the fund solvent again, right? And that could be structural changes to the program, or could mean a big bailout from the Treasury General Fund, right? But I think that for deficits longer term, we're going to need a moment that confronts Congress for Congress to act rather than assuming that Congress will act preventatively to kind of do something. And the reason for that is just politics. When you look at the polls, American voters do not find deficits to be that problematic. When you look at the issues they're concerned about, it's not a top issue. So until that changes and becomes a top issue for voters, it likely won't become a top issue for politicians.